Coming back to the webinar, would not take much time on that. Here we would like to highlight the how the MSMEs in India have been seen, right? So there have been always the discussions about how the MSMEs can be served. I mean, although being one of the major stakeholder or the major contributor of the economy, this segment is usually seen struggling for the basic needs of the basic financial needs per se. So be it credit, be it payments, be it collections. So those are the ones services which they usually go for from the financial perspective. But what we also want to bring out the flavor is like it's not the financial only. There are a lot of non-financial services which MSMEs are currently lacking to avail it digitally. So, having a need of providing such, well, say the composite or comprehensive solution for the MSMEs would definitely help. And how does this help, or how can be designed, and what are the potential opportunities for the fintechs in this segment is something we would like to call out in this webinar. So, I would like to welcome you all. Myself, Vikrant Kulkarni. I'm working as a principal consultant in Digital Fifth. Prior to this, I have been working in the banking side. I have experience of working in as a developer, as a integrator, as well as from the national manager side in one of the SFB earlier to this role. Yeah, so I would be having my colleague Sumit also with me. So Sumit would like just to introduce yourself.
Thank you, Vikrant. My name is Sumeet Vishwakarma. I'm an associate consultant with Digital Fifth, and I've been associated with Digital Fifth in the last 1 year or so. And I've done multiple projects, be it in the MSME segment, be it in the cross-border or in API segments. So I have done multiple projects within fintechs as well as within the international bank as well as public sector. So, diving into our topic, that is empowering MSME through all-in-one single platform financial solution. So before going into the major pain points and major highlights, what MSME would require and what are their basic needs within the financial transaction itself, we'll be moving towards the overview of what is this segment itself. So we all largely know the MSME is divided into three segments, that is micro, small, medium enterprises. So basically, when you talk about a micro segment, so we like it has been mentioned within the standards like investment should be less than 1 crore and turnover should be less than 5 crores. But basically, what we know is that our shops at our streets are basically a micro enterprises or nano enterprises, considering the whole micro segment itself. And then we largely move towards the small enterprises. There are larger enterprises than the micro one, and they have the investment capacity less than 10 crores and turnover of less than 50 crores itself. And then when we do to move to the medium segment itself, we have their investment capacity of less than 50 crores and the turnover is less than 250 crores. These are the majorly manufacturing or the services business who are have a large numbers of employees itself, but not on the corporate level. So moving ahead with this, we'd like to cover what each segmentization within the MSME segment itself. So we all know within India, we have around 6.63 million MSMEs, largely considering the micro enterprises itself. So we have around 63 million micro enterprises and around 0.31 millions of small enterprises and very minimalistic of medium enterprise. Of course, the larger we go, the smaller the pie size will remain. So that's how the pyramids look like. But when we see within the urban as well as within the rural area, so it is equally divided. The numbers of MSMEs are equally, more or less equally divided. That is, on the rural side, we have around 51% of the MSMEs lies, and then the urban side, we have around 49%. When we move within the different segments within the MSME, that is manufacturing, trade, or services, it is more or less equally distributed. And within the coming slide, we'll also see how it has been impacted for our whole GDP. As we know, India is a very growing market itself, and we have been seeing in terms of investment from the foreign entities as well that the remittance are quite high. So there is a chance that within the MSME itself that there is some financial needs for the MSME's customers, which will be largely covering in the future slides. So will we try to cover what is the total GDP impacts by our MSME? As we all know, it is around 30%, and it has been subdivided within those manufacturing, traders, and service platform. Apart from GDP itself, we have a huge contribution towards the employment, since our government's initiatives are also aligned with the various MSMEs requirement, be it on the lending side, be it on the payment side, or be it on the remittance side. So we have seen the various regulatory bodies coming forth to empower them across, because at the end of the day it will upskill our whole market as well as create opportunities for the fellow Indians itself to for the employment services. When we talk about overview of our MSME, so like how their credit market looks like. So when we have a discussion over the micro, small, medium, so we see that there is a very different views in each segment. So as we can see that the credit index is majorly growing from 2020 to 2023. So there is a huge demand within the MSME market itself, but these demands are coming majorly from the micro and small enterprises. Of course, the medium enterprises do have their demand, but there has been a decline within the year-on-year growth on their credit requirement. And so the various platforms that we're going to discuss within this webinar itself, so how they can cater to this micro segment as well as small segment within different persona that we would like to cover. And when we talk about the credit supply itself, so we all know that overall lending market is majorly driven by retails. So within the retail, we have our small part, that is MSME, which has been catered by both banks and NBFC. So from the diagram itself, you can see that from 2020 to 2023, the pie of our MSME segment, credit supply has been increased and is majorly led by both NBFCs as well as banks. Of course, in the banking, we have some stringent guidelines that need to be followed. But when we talk about NBFC, they are more towards risk taking, and as well as they are providing easiness towards the MSME to get easy credit within the sector. As you can see, there has been total increment of the total loan book size of an MSME from 4.6 in 2028 to 4.9 within 2022. And we can also see like majorly the overall pie is remaining 18% for the MSME. But if surely it is there is a room for improvement, and surely the various partnership with Fintech as well as other players will help this group. So I'll give it to Vikrant again for taking this forward.
Yeah, thanks, Sumit. Thanks for that introduction. From the perspective, what I would just like to summarize that the MSME perspective, if you see, be it micro, be it small, or be it medium segment per se, that is further again divided into the multiple parts industry-wise. It can be from the perspective of having the trade services as well as the manufacturing units per se. And Sumit also helped us to understand how this is bifurcated from the geographical perspective, industry perspective, as well as from the contribution to the growth of the country as well. So would like to just put a light on how these MSMEs are been seen, right? We typically get understanding of the MSMEs is like a small, very small shop owners, or have been misunderstood as only the part of MSMEs, but it's not like that. It's widespread word. Medium segment, if you see, as Sumit was mentioning, the 50 crores is not a small amount as such, right? We'll just try to define how this MSMEs will look like, and what are their basic needs would be. So from the services perspective, if we divide it, slice and dice through the perspective of industry type of industries. So from the services perspective, the largely the requirements happens between the payments and collections, which stands true for the any business as such. But business investments related, if I want to talk about the business investment in services, typically stays low at some period. So this can be, this is a very widespread. What we try to capture is very small. You can say the bite of this whole segment per se. If you try to put it like if every services industry and would look like this, so the answer is no. So each business works very differently. Each business has its own need. We are just trying to generalize it from the perspective of the discussion per se. So as an example for services, we have taken the example of small supermarket as such. So in the supermarket per se, I mean, again, it's contextual. But if you want to consider which is a very small one, and into the tier 2 or tier 3 type of city, then the business investment would be low, right? So they usually focus on the supplies and small setups per se. And revenue wise, it will be moderate. Again, the segment, if we whatever we have considered is a cash led segment. Although the emergence of digital payments into the day-to-day uses, it has been migrated to the digital per se, but still this is been seen is more to the more drive towards using the cash per se. So financial needs per se, this segment usually will would like to have the small term loans as well as microfinance I mean loans from the microfinance institutions or the NBFCs for the expansion of the business, etc. Look, marketing strategies wise, it will be very local. They will be having better control on the people who are around them. So usually this segment was, I mean, typically in services, again into the micro segment, if we see, this has been seen typically into the local area, right? All the moms and pop stores will be the part of this segment per se. If I want to expand this again into the different part like of the manufacturer, so manufacturing investment will be much higher into the business, right? Because usually this segment will be seen more closely working on building the products per se which have been used. So be it the end product or be it a raw material. So manufacturing industry is widespread over. So if I want to just take an example of small apparels, so usually apparels manufacturers are the spread across the world. I mean, you would surprised to know that the large of the brands which we use and the amount of you can say the raw material which they procure from the small manufacturing businesses is too high, right? I mean, there are multiple examples to prove that. I mean, be it the example of building a vehicle. So if for a vehicle, I mean, there is one organization who will be assembling the things, but there are a lot of small manufacturing companies who will be who will be manufacturing the bulbs or the covers or the seats or the cushions or the dashboards, etc., and so on. The list is too high, right? So this is a widespread segment per se, and manufacturing typically have been seen to have high revenue building businesses as well, although the investment is high. And again, the you can say the market, having the market fit product is something which is a very essential requirement of manufacturing business apart from the other businesses, I would say. From the daily activities perspective, the MSMEs will look like to have the customer relationship and payroll management, which is now we are trying to see as the business is growing or the as we are transforming into the segment or the larger businesses types of industry, etc. The activities are also getting changed. I mean, it's not just limited to payments and collection. The new things would be coming in, like maintaining the customer relationship, right? Because manufacturing business, which are not typically B2B businesses, sorry, B2C businesses, typically have the corporates or the large companies as their customers. So they need to maintain those relationships with the customers differently than do for the B2C businesses. Again, they'll be having a small, you can say, workshop or the office per se, where they will be manufacturing units per se. But so they'll have the multiple people working with them. So a payroll management becomes one of the part. So this is again a non-financial requirement. I'm just trying to call it out here. From the finance management, again, the payment collection, all those parts, invoicing, etc., will fall in place. Accounting also will be part of it. But this typically manufacturing also will be attached to the larger set of businesses. So having ERPs like enterprise resource planning based applications would be one of the part of them, right? Because they'll have to connect with the multiple suppliers as well as buyers of the of their product. So that is where they try to have a scene to be more digitized and sort of structured businesses per se. So this is something which we can call it as the manufacturing. But in under the manufacturing, again, it's not the micro one, it would be small and the medium ones. Micro may not have this much of structure. So the requirement might be similar. But if I mean, if just I want to share an example, likewise, if I want to take the example of very manufacturing segment, which is again into the micro segment, that largely would like the ones who is building the you can say the apparels, right? So small apparels or the t-shirts, etc. So there they may not have the bigger setup as such, but they'll have the people who are working for them. So they may not need the payroll as well, because they might be working on the contract, or may not have any such arrangement itself. So it differs business to business. That's the reason I'm just calling it out time to time, that it is not the generic one. I mean, you will find very much variance into the each of the segment, each of the business, each of the geographies, each of the type of industry, the way they are working, the years they are into the business. So it differs everywhere. So we are not at all trying to generalize it, but we are just trying to share a few of our thoughts and few of our understanding from these segments, and the few of the interviews what we had in the ground from this segment. Yeah, from the trader perspective, they'll be again the business would be higher. So apart from the manufacturing businesses, here the requirement might be of e-commerce integrations. Typically, the trader you will be seeing, which will be working on to having the multiple set of online transactions. They might be having, I mean, apart from having payroll management and financial management, they would typically have the integrations with some online platforms, right? It may involve into the new age adoption of OPGSP like soft framework as well. So they typically I mean, they typically work on to the getting the products inside, and then having the good storage and the logistics part of it typically been taken care of. So revenue wise, it is largely influence one. So traders usually what you have seen are the ones who would like to manage their businesses on the edge, right? So they may have a lot of influence of the market conditions onto their business. I mean, depending on the which trades they are doing and which are the businesses they are into. But typically, they are been seen like have to have uh, a broader, you can say the competent medium risk sort of businesses running. So finance wise, so they will be having. I mean, bulk purchase, they will be looking out for the bulk purchases. So definitely the overdraft sort of loans would be one of the things which they would look at, where they would have the seasonal businesses, then they look to have the credit coming in for that typical period. And yeah, definitely they'll look for the supply chain partners as well. So supply chain financing would be another need of this sort of businesses largely. Although manufacturing business also would have the similar needs, but trader largely would be seen more active to avail those sort of services. So embedded finance perspective, would like to just throw some light, like I mean, few of the examples which you have seen in the on the screen in last few of the slides, where you have seen the few of the logos which have been depicting the non-financial services, but providing financial services as well. Yeah. So before going into the embedded finance, I mean, how the impact of the embedded finance would be, would like to just share. I mean, request you to please share the feedback, so that definitely help us to improve the content, and as well as if you have any sort of guidance to us, that will be helpful. So the link has been shared into the chat window. Kindly fill up the feedback. We will also see to you that this information is being reached to you, and if in case of any requirement of having one-to-one conversation, you can also mention that during the feedback. We would be happy to host that. Yeah, moving back onto the impact of the embedded finance. Likewise, the innovation into the banking services has been seen, right, where the user experiences, personalized services, quick onboarding has been seen into the embedded finance. I mean, cost efficiency wise, So, I mean, if it is a digital in the embedded finance product, you will definitely have no overhead on the physical branches, lower fees, financial inclusion wise, access to underbanked and individuals as well as affordable solutions have been able to capture with the embedded finance. So, a few of the examples I would also like to quote here. Likewise, I mean, sorry, the companies, few of the fintech companies which are also building the product for the financial inclusion are typically adding the financial services into their non-financial apps, which is helping the build the consumer community to avail their services into the app itself. I mean, just to take a name, it can be from the inclusion perspective, it can be something like Garamin app, Sarva Garamin app, etc. So those have been there from the accounting side, be it Tally, account, Open, Zoho. Those are all also trying to build these products which are more providing services to the MSMEs from the financial as well as I mean, from the base of non-financial to financial services. Uh, Typically, what are the challenges would be there in this segment or the embedded finance products would be to have compliances framework into the picture, right? So, I mean, the data confidentiality clauses or be it data sharing clauses, etc. So those are typically very tight for this segment to carry upon. So from the traditional banking perspective, yes, definitely the impact would be there on the from since the customer focus would be higher and the ease of use would be there for the customer, so that may impact there. But I would also like to say that typically these people have been, I mean, typically these banks entities have been also adapting to the bank fintech relationship, so where they are trying to capture more and more business through such embedded finance product. Yeah. So, market growth wise, embedded finance product have been seen more to have popular again in the younger businessmen where they would like to use the mobile phone for all. Likewise, so I have personally have seen a few of the examples where the person is using his phone app to generate the invoice, who is parallelly handling a small, you can say, garage shop into the on the highway, but he's using only phone to do everything, right? So he can punch in invoice, he can give invoice there itself. So just had to try to get some chat with him to understand how does he manages. So his answer was very simple, like I use XYZ app. This app has all the functionalities, and the backend of this app is accessible to my fellow partners as well. So that one app solves many of the financial needs, but when it comes to non-financial like maintenance of stocks or maintenance of customer relationship, likewise they also have the buyers from whom I mean, they also have the buyers community, from them they buy the services, all the raw products as well. But the management of that is something which I could see the challenging for him, as it was not the part of the app. But eventually the things are getting added, so he can I mean, one can maintain the stocks, pay the invoice, I mean, generate the invoice, share the bill, and get the, you can say, the personalized QR code with the amount on the phone. It's something which is good to have, but there is still area for the improvement which have been seen out there. Yeah. So there are few of the pain points also have been there, right? I mean, as I was talking, and I mean, this is again, I would like to call out that this is on the basis of the survey or the, what you can say, the interactions what we could gather from our side. Definitely, we are trying to have more conversations with such segment, but the idea I thought was there, like, was we got so dope, I mean, deep into this segment that we could find out few of the pain areas also which have been seen, right? So they have a very limited credit awareness as such. So having to know that I can get the credit and when I should consume that credit or when I should look out for the services is very crucial. Is which is something may not be the part of the MSME segment as such. So typically they'll be taking help from the their accountants or the CAs, etc., that how to manage their finances. So that has been seen somewhere as very limited for the MSMEs from the founder's perspective, I would say. Also, the documentation which has been asked for the credit is typically high. So they tend to go for the then local sort of or community-based credits in some segments. Definitely, I'm excluding currently medium and some part of small segment here totally, because that would definitely will undergo the GST sort of arrangements where they will be largely looking out for the loans from the banks and NBFC and typically the formal lending mechanisms. The interest rate have been seen typically having higher for the MSMEs. That again for the particular ones, I mean, if I pick up a particular case, I may not find it the interest rate would be higher, but if you compare it with some retail or salaried class, definitely you will see the difference then and there itself. So turnaround time perspective, I mean, having to have personalized discussions or the I mean, there are various terms used for that, like technical PD, tele PD, video PD, and again in-person PD, etc. So those all the processes which are definitely from the lender perspective might be crucial, but those are I mean, having the impact on the turnaround services for turnaround time for the borrowers per se. And the data, again, the data has been typically been used, which is banking data, etc. So those are been typically been seen, right? Having to have use of the business data has been seen very limited. Of course, there are reasons for that. Likewise, each business runs differently, as I was mentioning, right? Building an underwriting model on top of that may not be that easier. But at least for some businesses, it can be done, is what we believe. So it may not be easier, but it can be changed after, I mean, follow through the timeline. It will have its own solution. For the new to credit borrowers, it's always difficult, right? Because it's a new business, and again, you are looking out for the new credit. Then it becomes very difficult for lender also to assess that customer, because the assessment which lies for the or the underwriting mechanisms what are being used, that has been used considering that the businesses are established and they are running for particular years and they are profitable, right? Which may not be the fact in all the businesses. Though some of the businesses may have spike of the profits and revenues, and again going flat for some period, then again coming on the spike. So having the you can say the risk modeling on the basis of business, on the basis of nature of business, as well as the financials, is something the need of an hour currently. But that is something which is very specific to the financial part of it. What are the daily activities of the financial transactions would like to just showcase on top of it likewise. So typically you will be able to see that financial management is one of the part of it, right? Apart from that, the MSME would also look into the how he can streamline the operations like accounting, how be it inventory management, payroll, employee engagement, employee management, etc. Access to the credit would be again a part of financial services, but that will be again one of the focus area, right? Compliance and tax management would be one of part of it. Market expansion, how we can improve on the market, how we can improve he or she can improve the sales cycle per se, the real-time integrations where they'll be able to showcase themselves on the larger platforms. So if you see the financial market or the financial services perspective, it will be largely 10 to 20% of their needs will be of the financial services. So typically, what sort of transactions they would be doing is they'll look into the cash flow management where receivables and payables are managed, banking transactions where deposits, withdrawal, investments, and the loans and advances are being managed. Again, purchasing and procurement would be part of it through supply chain management platforms, and sales and revenue collection, as well as the payment platforms, which will be largely the digital payments. So yeah, largely, if you see, these are the services which they will be using. And I mean, so far we talked about largely on the MSME side, right? So wherever you see the part of it is financial services. Apart from financial services, managing sales, marketing, employees, employee engagement, be it be it expansion of the business, managing the taxation, etc. There are a lot of parts to it which MSME would go through. Just focusing on the how the backend infrastructure would be required from the perspective of financial services. Would just request Sumit to take up this forward.
Thank you, Vikrant. So as Vikrant was saying within the previous slides, so each MSMEs that that would be within the Indian market are different, and for each one we would be having different case scenarios or use cases built. So when we talk about the backend infrastructure that is required for the MSMEs, so we can see that like there are multiple APIs attached. So one second, huh? One second. Yeah, sorry. So there are multiple banking infrastructure that has been provided within the banking system. Like we have a multiple architecture that is a core banking system. We have CMS, we have payment system, we have trades platform. So these are the platforms that have been incorporated within the banking infrastructure that is at the back end. But how this banking infrastructure can be exposed to the end consumer? Maybe it's a tea stall businesses, or maybe it's a manufacturing businesses, or maybe it's a trade service businesses. So how these facilities can be directly exposed to the customer, not via banking application or a via banking itself, but via connected banking application process. So there are API connectors involved in the middle layer itself, where these connectors help various platform to put forth their customer all the services. Maybe it's an ERP platform, maybe it's an accounting platform, maybe it's a mobile application. We have various use cases. If you go to a tea stall, they'll have their QR code business application where you'll have to do the payment. The transaction has been daily been recorded within those QR codes, or within that business application itself to that vendor. And based on those transaction histories, or based on the transaction process, there are various services provided by the platform providers that are interlinked via lenders or a bankers at the back end. So with the help, this is all the we wanted to cover within the backend infrastructures, how this API-led model is helping this whole open banking architecture, not in the retail side itself, but on the MSME side or on the corporate side as well, with the various types of platform. So moving ahead, we would like to understand what the trends and opportunities for this MSME segments. We'll like to call it as a fintech, since it has been led by the banking infrastructure itself. So there are multiple emerging trends and opportunities, be it as a digital lending platform. When we talk about digital lending platform, it not might be the pure play lending services, but there there might be a front end application with the help of these transaction process that we were discussing, as a tea staller who has a daily transaction that has been happening on it. So how we can leverage those transaction data and put forth some lending services, so that when the tea vendor wants to have avail a loan, a small ticket size loan, maybe of 50,000, maybe of 1 lakh rupees. So how he can get an easy access to the credit, and he can manage his working capital. Similarly, when we talk about financial inclusion, as there are multiple guidelines by the RBIs that we have to improve the whole PSL lending process itself. So all these financial inclusion platforms, they can utilize different application or a platform itself, so that at the back end there is a multiple banking partnership, and at the front end they can provide various financial services. One of the largest example I can say AEPS, which has been grown across within the rural segment itself, so that villagers can take hold of this whole process and get their money transaction from one point to another point. And when we talk about an embedded finance platform itself, it's like an open banking system where bankers or a lender or a financial institution directly connects with the front end customers. They can provide multiple services, maybe it on the payment side, maybe it on the lending side, maybe it on the insurance side. So now also, if you have if you can use your phone pay, Paytm, other services, you can directly book an insurance within that platform itself. So how it is possible? It is via embedded finance process itself, where open banking integration is happening. So these all things are being followed within the technology and as well as in the emerging processes. But when we talk about MSME itself, so we have multiple scenarios like supply chain finance. When we talk about 𝐹CAs, which has been largest, within the gift city, they are regulating the whole process of supply chain finance. They are putting forth the various traders, buyers, suppliers, and financial institutions into a single platform, and they offer various types of invoice discounting, factoring, and other different types of credit invoice process where they can ease the life of a supplier as well as on the buyer side. And last but not the least, the digital payment solutions where we have multiple gateways as well as wallets. And UPI has been the forefront of this whole process where we can easily do the UPI transaction from a single click of a button. And that's how these emerging trends look like. We'll also discuss the various evolving use cases that we see within the market, one of which is HDFC and Paytm collaboration, where they provide multiple solutions to their MSME business owners who are using Paytm business application itself. So with the help of transaction data per se, we'll get to understand like what is the data, what is the transaction data, daily transaction data are been coming from within the application, and based on those data, the underwriting model has been built so that Paytm business application user can easily avail the loan. And similarly, there is an ICICI Bank integration within the Zoho platform, so that any user who is using the or any business who are using the Zoho platform itself, they can easily, get all the banking services, or maybe once the invoice is generated, they from the different vendor, they can directly do the payment processing as well as for the reconciliation process. It really helps. Similarly, Axis Bank and Razorpay also teamed up for this whole payment ecosystem and the banking services. There are multiple other use cases like Udan as well as Yes Bank. So you might be aware of what is Udan is. They are basically FMCG products for the businesses itself. So whoever uses those application, they'll directly get a working capital process within the app itself based on their, what all procurement they have done with the help of Udan platform itself. So these are the some of the really great initiatives by both bankers as well as fintech partner at the front end, which help on the various credit services. Now, since we have also been partnered with various fintechs within this domain, and we have helped them, building the whole financial entities as well as providing them the lending solution from being on. This is a case study for an accounting platform who wanted to become a lending, who wanted to evolve into the lending services also. So we help them in within from the pioneer stage to the stage. Right now, they are doing a quite a comprehensive work within the lending solution business itself. So what was the objective was to build a whole strategy for them, and we have to integrate with the various center within this whole process and build a whole lending product itself. So what we started with, of course, is the building the strategy for them, and then we designed the whole workflow for the product, how the product should look like, what would the product, and what would be the features of the product, and what would be the lenders at the back end, so that they can easily give us the credits as well as we can supply it to the end consumer or MSME customers who are using those platforms. We also build the customer journey, and we have established their new entity from where the lending business is happening. So for that, we have to do the whole compliance check and the security policy checks. Apart from that, how the customer should be nudged across, that marketing process also been done. And of course, within those whole engagement, we were able to improve the loan book size. So coming from forward with the engagement within this whole process, we have to engage with the business team, we have to engage with the technology team, product team, marketing team, sales team. So from the each business, from the each team side or the stakeholder side, what all things were required, we have to get involved with them. We have to build together so that we can understand their customer side, customer segment, and build accordingly the whole process. So based on their customer segment, based on their what are requirements of their customers, we help them into building the whole strategy piece. And post that, We also onboarded various lenders and credit information companies, because at the end of the day, these are the financial institutions who would be able to provide credit directly to the customers or indirectly to the customer via our platform. And since this whole accounting platform was led via distribution model, there is a partner involved within each layers. So we also build the whole model for them, how they can reach directly to the customer and how this new services that an accounting platform is providing will be able to reach to the customer. Post that, we defined the product. One of the product was first was the unsecured business term loan. So we defined the product, we built the whole journey, we built the whole wireframe. We did the competitor analysis as well. What would be the turnaround time for a loan origination process? What documents would be required? So for that, we try to optimize the documentation so that minimum documentation should be taken from the MSME customers, because as Vikrant was mentioning, this was the major pain points that we found within the survey, that the documentation is too high when we go for the any kind of MSME loan itself. So we optimize the whole documentation process, we build the pre-eligibility engine, because when we are a business, I don't know what my eligibility would look like, what I am capable of taking loan itself. Because if I'll go to the bank or if I'll go, there will be a different n numbers of process involved before lending into my eligible offer. So we at front end itself, we build the whole eligibility rule engine, to help customer to get aware of what their eligibility would look like and what they are capable of availing the whole credit. Similarly, with the help of telemetry data, we help the technology team to make this as a data point where we can nudge the customers from the marketing team as well. On the sales side, of course, there is a partner-led model, as I've already spoken. So we build the whole partner-led model for this lending solution, as well as we improve the loan book size from last 8 months into a 10 times. And at the end of the day, we did the whole program management, as well as we drive the whole steering committee for them. These were the thing, the operations thing that we done. And of course, there is our digital fit approach, where we started with the current assessment, and then we moved from current assessment where we understand the customers, and then we moved to building the whole lending journey, and then the opportunity implementation process that we built for. So I'll request Vikrant to take this forward.
Sure. Yeah. Thank you, Sumeet. Thanks for that. So there are a few of the questions which have come up during the session. And before that, also, I would like to request again for you guys to please submit the feedback if you haven't. That will help us to connect with you back as well as it will help us to improve our content or any other expectations if we have that we would like to revisit and include your feedback into the upcoming sessions. So there was questions from one of the user, which was largely from the perspective to have lending services through API model, and that is related to fintech. So usually fintechs have to partner with the lenders per se. So it would not be a very generic answer per se. So since I have a very limited understanding what the business you are learning into, and what fintech is your company you are holding currently, the answer may not be that perfect, but largely it will be like there will be the partnership, bank fintech partnership or the lender fintech partnership, which will be leveraged out here with the including the compliances which are likely from the digital lending guidelines and KYC, etc. Under that, you will be able to do the integrations with the lenders. So primary feasibility would be there from the lenders perspective to have APIs per se exposed to the partners, where the primary understanding of the borrower can be done by the fintech platform, and that can be passed on to the lender for the underwriting and the rest of the journey of the fintech. So this typically goes into the multiple phases. It can be through the redirection journey. It can be through the part of you can say the journeys which are very specific or the mutually shared journeys. Likewise, the front end would be from the fintech on, all the backend will be the APIs will be provided by the bank or the lender. That models are also in the market. Or at certain period, the fintechs also do help to collect the data points which are required for the underwriting. So that is very broad answer per se. That may not be the perfect one. But largely, if it is the question is from the perspective like, is it possible? Then that is possible, but you need to have the lending partner with you who has this API model built in or APIs which are ready with them. So if you want, we can connect offline as well, and we'll take this discussion forward as well. Also, there was a question from Anil, which was on the how can anyone provide lending solutions without an NBFC license? So, having an NBFC license is essential for the lending. But as we were discussing, like between this bank fintech partnership, you can have the lender in the backend, and the APIs can be consumed by the fintechs, which are largely servicing the customer or onboarding the customers, and they are helping lenders to get that information inside. But definitely the credit policy, the underwriting, the decisioning of giving loan or not, it's will definitely be live always with the lender. So either you should have your own NBFC. If not, then the partnering with the lender like banks or NBFC is one of the option which we broadly discussed in the earlier example as well. One of the questions from Pratik was like, can a fintech use any product of bureau for validating the borrower? So bureau has their own set of conditions, who can use and who cannot use the bureau. So bureaus are sorry, from the customer perspective, customer can avail the bureau score as and when they want, and from as and when the I mean from the any platform which are providing the bureau services. But to get onboarded on the bureau, there are certain conditions which has to be accomplished. I mean, broadly, I would say it is not open for all. It is for the specific use cases basis, and again, it differs from the bureau to bureau. So largely, if you see the a larger bureau may not be comfortable to provide these services to all. And either way, I mean, with the guidelines which they usually typically run into, they cannot provide these services to all. So this will be very contextual. And again, based on the entities which you are running into, so they will be having a set of entities which are allowed to access the bureau score per se for any of the use case which has to be built on top of bureau. So if it falls within that, the bureau can be accessed. But if I would want to say the fintech perspective, which is unregulated or not from any of the services background, which is essential for the banking industry or the BFSI norms per se, then the answer would be no in that. Yeah, but is it only no, no? So that is strictly depends on the bureau which you are integrated into, but not any fintech only per se can consume the bureau. Yeah. Also, there was a question on from the financial inclusion perspective, are there any solutions to consider the language diversity? So the question is from Anil. Anil, I would like to connect with you because I'm not able to understand this context as such. But from the inclusion perspective, if the question pertains like any solutions which do provide the language, multilingual experience, the answer would be yes. But I would just like to understand more details to answer it. So I will hold that question for the answer right now. Yeah. Yeah, largely that's all from our side, guys. So if you have any questions, we can pick it up. Also, guys, I would request all you to share the feedback if you haven't. I mean, as I can see, there are a very less number of feedbacks have been here. So would request all of you to spend a minute to share this feedback. We'll also have connect with you offline in case if you have if you are looking for any of the specific services which you would like to have from us. So we'll be able to establish that connect as well. So request all of you to please share the feedback. That will help us also to I mean to to improve the content and the delivery or any of the points you would like us to take care of. Yeah, sure. Okay, fine. So we are getting the feedbacks. I mean, thank you for that. With this, we would like to call out the off for this session. We'll be coming back soon with the detailed understanding on the MSMEs per se, right? It will be the part of continuation of this, right? Here we could focus on very small part of the specific lending services today. We'd like to have focused discussion on that as well. So request all of you to join that session as well for the better understanding of this segment and their credit related needs in the upcoming webinar session. So with this, we pause. Thank you, everyone. Thank you for joining in. And as I was mentioning repeatedly, please give the feedback if you haven't. And if there is something which you can help, then we are reachable on the LinkedIn and other social media websites as well. So thank you for all for spending time with us. Thanks.